Anubhagji, CEO and MD at ICI Securities, will be with us. On the charts, Sandeep Wagle, founder and managing director at Apta Technical Advisory Services, and Sajeev Dhawan, MD at JV Capital Services, joins in on the show. With respect to the kind of outflows that we've been seeing of late, what's your sense as to how the liquidity situation is going to pan out? Because clearly the next trigger seems to be the elections.
Well, the elections, Ivana, are still a few months away, so there will be a lot of volatility. And the key thing in the short term will obviously be inflation figures later this week, and that will add to concerns that are we at the peak of the rate cycle, or the RBI governor begin to cut rates over the next 3 to 6 months. For sure, the FI flows have turned negative. That's resulted in a bit of nervousness and caution in the markets, as you've mentioned earlier, at around the 6,100 levels. Profit taking does seem to come in. The trend on the Nifty is probably slightly on the weaker side, but bulls, I'm sure, would begin to buy again at 59, 59.50 sort of levels. And we are in a very narrow range. It's not breaking out really either way. The sentiment has come off quite negatively over the last few weeks when there was talk of much higher levels, and most stocks had raced up quite high to good prices. But you've seen a good correction in the tech pack, as we've mentioned. TCS has come off quite sharply. So I think the next few days will be volatile. There's no clear direction in the markets, and so long as the FIs remain sellers, it will be hard for the markets to maintain high levels, as Nikunj just mentioned.
Sandeep Wagle, what is the right way to look at this market? A market which has found support closer to the 200 DMA, or a market which is struggling to cross over key technical levels?
Nikunj, I think we can talk of both. Both are happening.
Both? You're trying to dodge me. I want a clear answer. Are we headed up or are we headed lower?
No, Nikunj, I'm not trying to dodge you. I'm giving a very clear answer. The clear answer is that the markets themselves are not clear. They are waiting for something in front of an event, ahead of an event. So in that sense, I don't see 59.50 being broken. I think you will agree with me. At lower levels, again, buying is coming in. At higher levels, yes, we are not in a position to cross 6100, or even if we cross that, I feel 6150 will act as a strong resistance. So broadly, to sum it up, I think we should not read into it as too much of weakness or too much of strength, nothing like that. Yes, certainly there is no strength, but it is not so weak where we will crash down from a current level of 6,000 or 5980 or 6,002 down to 5,700. I think that weakness is not what I am seeing. So broadly undecided, waiting for something to happen, lackluster is the best way to define this market. And mind you, we are getting individual stocks which are moving up and down. So in that sense, I won't agree with you that the Nifty markets are going to crash down or something like that. Yes, the Nifty is lackluster. I won't be surprised if a 100-point move comes either side. But that's all about it, nothing beyond that.
Anubhagji, everyone is really using words like range-bound, lackluster, lack of momentum. What is your house view? What are you advising your clients? Should they buy ahead of elections, or should they sit out ahead of elections?
No, that's true. I think let me bucket this into three concerns that I sort of gleaned through when I spoke to them. First, of course, is elections, and there I think people are really looking at that. If there is a stable government, it is positive. And one thing I must tell you, Nikunj, that most of them, they don't of course make light of the fact that we have structural issues, coal availability and infrastructure and policy paralysis and all of it is there. But I would say that almost 80% plus, they think that if there is a stable government, it is something that is fairly man-made, and it will get sorted out if we get a good government. And regional funds, surprisingly, that they seem to be quite confident that it is a man-made thing, and they have seen it in other places as well. That these man-made issues, if there is political stability, it gets sorted out, in time. Of course, Indian fund manager, of course, think as well that it gets sorted out.
So what exactly will we be watching out for? Well, of course, the key is going to be the reaction to the Tata Motors numbers. A great set is what the company put out. And of course, we will have the trade data that it will be declared anywhere from the 11th to the 17th of Feb. And I don't think it takes any brownie points then, Nikunj, for guessing that Tata Motors is going to be key. Now, while the domestic numbers remained a drag, JLR really stole the show.
17% plus margin. Street was betting on something like 16.5%. and these are blowout set of numbers. Markets will reward these numbers. And the interesting bit here is that Tata Motors, in the run-up to the numbers, was not hot stock. I mean, it has corrected from levels of 415, 420 all the way down to about 350, 360. So Tata Motors actually this year has been an underperformer, and underperforming stock has come out with good set of numbers, way above estimates. What will happen? Obviously, re-rating. Sajeev Dhawan, are you with me?
Hi, Anagan. Yes, as you said, Tata Motors has been maybe an underperform over the last few months, but it had given investors a pretty decent return if you look over the last year or so, and there have been a lot of investors and traders going long in the position in the stock again over the last few days. We've seen that. I don't know if it'll sustain above the 400 sort of levels, but it's clearly been moving up on the back of anticipation, good figures from JLR over the last several months generally. So it is more of an export call on their global profits. Domestically, even the management, I think, has said that things will be tough next year. So you are basically buying a proxy stock for how the UK, China, and global markets perform in the auto market. So not a bad stock to have in your portfolio, but if you're looking from a domestic auto company, then Tata Motors is not the stock. You will still have to move to a Maruti or probably an M&M.
Sandeep, what's your call coming in on some of the auto stocks, particularly Tata Motors, that we'll be watching for?
Well, on Tata Motors, I don't see it breaking 340 on the downside. I don't see it breaking 380 on the upside. Now, this is a view for the next week or two. Talk of the next few months, 3 to 6 months. I think once beyond 405, my target of 435 to 440 should come in. Now, that 6 months could become 8 or 10 months. That doesn't matter. Long-term view is certainly bullish. I think in the short term, sideways. And at 330, 335, I think the bottom is made for quite some time.
And we come in on flows, because that's the tricky part. Unfortunately, 2014 is not off to a great start when it comes to global liquidity.
There seems to be some, when ETF is getting sold off, of course, the whole basket gets sold off. But, one thing that I'm gathering here from a portfolio positioning perspective, that clearly, there seems to be some churn on the portfolio, and people are getting more and more sort of overweight, on good solid companies. There seems to be, underweight on high beta. So they are moving slightly into a little bit of a lower beta companies. The thing that I see that they are getting overweight certainly is private banks are getting overweight. Pharma, they were already overweight. They seem to be cutting down on consumer. They think that if inflation is high, then disposable income will come down. But overall, we see a slight shift in the portfolio towards low beta. And it is also sort of accelerated by the fact that there seems to be some redemption pressure in some of the funds, certainly. And last year, some of them who were underweight, India, they seem to have gained by being underweight in India. And they, at this point of time, although they are funds, they don't seem to be in a terrible hurry to become equal weight or overweight in India till things stabilize. So I think that is the turning point. If sort of elections turn positive, that is, if there is a stable government, I still see that there is some firepower which is left, which can then start to come back into India. As far as Nifty levels are concerned, overall they don't think that it's going to go down too much. I think they think that it will get supported somewhere around these levels, because I think that they feel that in the last 6 months things have moved positively and not negatively. They seem to be very enthused on the spectrum, and they thought that this money coming in is a big booster. Not only is a big booster, is of a flexible policy, which has led to this kind of enthusiastic response on the spectrum side. So overall, last time when I had visited and met these large funds, which is around 5-6 months back, I think the mood now is certainly more positive, more sanguine than what it was 5-6 months back.
Let's get in Ajay. He joins in from our research team with what the dealing rooms are advising. Ajay.
Well, Avan, JP Associates is one stock which dealers are recommending to be shorted in trade. If you look at the intraday graph, there's a massive breakdown which has happened on the price and volume front. On very high volume, the stock ended at day's low, even on an adjusted basis. So a lot of short positions are already in the system, and dealers expect that 35 to 36 is the kind of levels the stock can fall to. Even the numbers, the details of which dealers are a little wary about. So they are saying that on technical trend, this is a good short. Not only that, Tata Steel is other stock which is on their radar, though the stock ended the day slightly lower, but after looking at and reading the ArcelorMittal results which were just released 2 days back, they are expecting that the numbers of Chorus will be very strong. Arcelor, which is the largest steel company in Europe, has in fact guided for much higher profits for the next year and have ended the year with very good set of numbers. So similar kind of performance is expected from Chorus as well, and hence they are recommending Tata Steel to be bought ahead of the numbers in weakness on expectation from a outperformance from Chorus.
You're forgetting Tata Motors, Ajay.
Well, yeah, it has the same region. JLR has in fact outperformed, isn't it?
It's Tata Motors. It's going to be Tata Motors all the way tomorrow morning. Ajay, thanks a lot for that. Sandeep Wagle, pick and choose your best ideas for tomorrow morning. Give me one short idea, followed with a long idea.
The short idea is a sell in a Godrej Industries, Nikunj. Stop loss of 275, target of 259. A long idea is the one that I have been talking of for the last 2 days, and I still maintain the moment. I still see the momentum and maintain that buy, and I am willing to even add on now at this price. That is a buy in a Sun Pharma. Stop loss of 602, target of 630.
Anup, which are some of the big companies that you're showcasing at the conference that you're betting on?
No, our house call is that I think, there is going to be some rally, one rally before the elections, on a positive side. And that, from the overall construction of the portfolio, I think it should be constructed in a way that 50% of it, have exposure to external factors. So, for example, IT, pharma, these are two sectors, one has to be positive one, because, and some of the companies who essentially are quite sort of external factor driven and not so much internal factor driven, and that's how the composition of the balance sheet is in many of the companies who have done large acquisition, and their revenues come in dollar terms and in foreign currency terms. And of course on this side, be sort of overweight on financials, select NBFCs, private banks, and one or two large public sector banks, but in general, the mid-sized public sector banks, one should be certainly underweight there.
Sajeev, run us through what gives you comfort in a market such as this, because while there have been quite a few spikes of volatility, at least in today's session, we have managed to hold above the 6,050 mark. In light of this, which are the themes that inspire you?
Well, we still like the alcohol liquor industry. There's been a lot of talk on McDowell's and UBL. They've been doing pretty well from a stock market perspective. The one we really like is Radha Kokatan. Has had a good run up. We've seen some clients buy into that stock as an investment, as also from a trading perspective. The potential for a stake sale there could easily take that stock up to 200, 220 levels. So that could be a good stock for investors or traders who've got that sort of higher risk capacity. And with the correction you've seen in the banking sector, we're looking again to accumulate financials like LIC Housing, Yes Bank and IndusInd Bank. So we're using the correction as an opportunity to get into the stocks which we believe the fundamentals are sound. Otherwise, from a trading perspective, it's still a bottoms up approach, and buying the Nifty on declines at around 59.50 levels, and possibly looking to short the Nifty again around 6,100 levels. I don't think, unless there's some significant news flow in the short term, that the markets have the capability to break out either side by more than a couple hundred points over the next week to 10 days. So we will be in that narrow band. So basically you'll trade in that sort of band and look to pick up the stocks which you've been looking for an opportunity over the last few months where you may have missed out.
All right, gentlemen, we'll let you go on that note. Thanks so much for taking time out and joining in with your perspective on the markets. And on that note, we wrap up the show. Thanks so much for watching.